Hey, what's going on? This is Kyle at Projection Hub, and today I'm going to be talking about how to get an SBA loan for a laundromat. Now, Projection Hub has helped more than 50,000 different small businesses and startups and acquisitions create the financial projections that they need for loan applications or pitch decks or just general business planning, you name it. And we've had the chance to work with a lot of different laundromats to get, their financial projections created and creating some business plans as well for different laundromats. And actually, before my time with Projection Hub, I worked with an SBA lender for about 7 years as a loan officer. And so in that capacity, I got to work with, hundreds of different small businesses and startups to review their business plan, put together a loan application, review their projections, and that even got to include some laundromats. So I'm going to take that kind of experience as an SBA loan officer and getting to work with lots of different types of businesses as well as laundromats specifically. And today we're going to be talking about using a free SBA loan checklist. So it's going to kind of cover from top to bottom, what you need to know, what types of SBA loans there are, the process, how can you be eligible for one, where can you find an SBA lender, lots of different details. So that will be a free tool that we're going to go through. It's available for you to grab your own copy of it down in the description below today. So yeah, today we are going to try to share a little bit of information, make you feel a little bit more confident about how to get an SBA loan for a laundromat. And if at any point you like this video, consider giving it a thumbs up. That really helps us as a fellow small business. Subscribe to the channel if you would like to get more small business ownership and startup, content and some guidance along some topics that some people would find, interesting or maybe even confusing in some cases. And if you have any questions, leave a comment down below the video. We are active in answering those comments, or you can just contact us directly at support@projectionhub.com, and we'd be happy to help you. So without further ado, let's go ahead and learn how to get an SBA loan for a laundromat. All right, so here we've got the free SBA loan application checklist. As I mentioned, linked down in the description below, might be popping up somewhere on the screen, but you can go ahead and grab your own copy. This works for, really for any industry, but today we're gonna be talking about, a laundromat specifically. So I'm gonna be giving hopefully some tips and some guidance around that. And so you can see, as I mentioned, we've got, how to pick the right, pick a type of SBA loan, how to find an SBA lender, a typical process, what documents are you gonna need depending upon if you're a startup, an existing laundromat, looking to expand, or acquiring an established or active laundromat, and then some additional details and expectations. And there's some things I've got that I'm going to talk about that aren't on this checklist too, but we've got a lot to cover. So just as a warning, this will be a little bit longer of a video. I encourage you to watch it beginning to end if this is something that's new to you and you're trying to explore the world of an SBA loan, for your laundromat. But also the video is, we've got the chapters for timestamps, so you can go ahead and jump around down, below at the bottom of the video if you need to do that as well. So yeah, we're going to kind of walk through this, and then I will jump to some different examples to show you things representing each of this section. So, maybe where we should first start is, what is an SBA loan? Maybe you're familiar with it, or maybe you've at least heard about an SBA loan. A lot of people became more aware of the SBA during the pandemic because of the PPP loans. The SBA has been around long before PPP loans, and we're not giving out PPP loans anymore. So, we're going to talk about what other options are available to you. So the SBA stands for Small Business Administration, which is, a department or, a bureau, an agency of the federal government. And it's a common misconception in, most of the SBA programs, you're not going to the SBA and asking for a loan and getting a loan from the federal government. That's not really how it works. Instead, how it typically works is there are a few different types of SBA programs, and then there are participating, what are called intermediaries or lenders that facilitate those programs. So those can be banks. We're going to talk about microlenders today. We're going to be talking about 504 lenders. There's a bunch of different ones that can kind of steward these programs and these processes, which can make it even more difficult to figure out what type of SBA loan is the best fit and where to find a lender, because most people don't even know that those types of lenders exist. And without getting too far into the weeds, because it doesn't matter that much, as I mentioned, you're not getting a loan directly from the SBA in most cases, or really any cases. A lot of the times, let's take a bank, for example. If they're a participating SBA lender, the bank is still going to do their typical loan review underwriting process. But in the event that maybe they're close to getting approval, but there's something a little bit too risky for them, they can dip into these SBA programs to basically help reduce some of their losses and mitigate some of their risk. Because the federal government's saying to the lender, hey, if you make this loan and it qualifies for this program and it happens to default, we'll cover up to 70% or 80% of the losses, and they'll pay back the lender on your behalf through this federal program using, tax dollars. So that's more how the SBA works. That's not super important to you necessarily, rather than just knowing, you still are signing your name on a dotted line to get a loan, and you will be responsible for that loan, personally, even if the business can't pay that back. And so that obviously has some downsides and some consequences to it. So getting off that soapbox, let's start kind of actually getting into the details here. So first up, let's start with the different types, probably the most common SBA loans. We've got microloans, which many people aren't aware of those. 7A loans, that's going to be the most common type of SBA loan. And then 504 loans, which again, people probably aren't super familiar with that. And maybe you don't care about the specific programs, but I'm going to tell you why you should. So first up, we've got microloans. And again, you can kind of just see exactly what I'm going to talk about a little bit here. Those are going to be most common with startups and smaller existing businesses. And that's simply because the loan sizes of microlenders are, they're micro. They're much smaller. Typically, those are going up to $50,000, And so the lender that I worked for was a participating microlender. You're going to hear me throwing out all these types of words and labels, and maybe it sounds like alphabet soup, and I'm going to try to explain them along the way. But you've got microlenders, and I'm going to say CDFIs in here, which stands for Community Development Financial Institution. So the lender I worked for was a microlender, a CDFI, and we could make 7A loans. So that's another key theme you'll see about 7A is there's overlapping programs. That may not be really that important to you. And again, when we get to the Find an SBA Lender section, which we'll do at the very end, that should help clear some of that up. But the more important thing is, how much can I get? Where can I get it from? And what can I use the money for? So microloans can be used, for just about anything. There are some restrictions, like you can't use it to buy real estate, which makes sense. You're probably not going to be buying much real estate for $50,000 or less. And there's some other small nuances like that you can't. But for the most part, working capital, equipment, all those kinds of things you can do with a microloan. And microloans are really underrated programs because it's a little bit smaller dollar amount, and the way that they are funding their loans and covering their losses, they can be a little bit more risky, which means they're more inclined to be willing to make loans to startups, which again, banks are in a position where they still have to keep their losses really low. So they're probably not going to be interested in lending to a startup as often. So we got microloans, and a lot of times microlenders are typically like nonprofits or they're local community lenders, whereas a bank might be multi-state, it might be national. Your microlenders are going to tend to be, city specific, maybe a few counties, maybe a full state. So they're going to be much more local organizations, which means they're going to be more familiar with the business landscape and might be connected to a lot of resources you would find valuable. So next up, we've got 7A loans. So this is going to be the more common type of program or SBA loan that you would come into contact with. Now, within that 7A program, there's a few subset ones. We're not going to get into those, just to basically say the loan amounts can differ. For instance, the lender that I worked at, we participated in a program called the 7A Community Advantage Loan. And that meant we could make loans up to $350,000 through that, but it was a 7A program. The 7A processes are all the same for these different loans, so I can give you insight into what to expect in that process and the documents and all that kind of stuff. But your standard 7A program, they can technically lend up to $5 million in a loan. So it can get really big. And that's what you're going to see participating banks. They're going to be using that program most generally. And that can be used for anything. That can be used for equipment, buying real estate, all of the things. Now there are some eligibilities you have to work for that, but for the most part, you can use the loan funds for just about anything. And then 504, which is probably the trickiest of them. And actually laundromats are probably a good example of one that could do a 504 loan if that's a route you wanted to take. But generally they are longer term, sometimes fixed rate financing. So think buildings, think lots of equipment. That's 504 specialty. You're not going to get a 504 loan for like working capital and some of those, tick-tacky startup expenses and things like that. But when it comes to buying a building or, equipping a building with equipment, which is a lot of what a laundromat is, that's kind of 504's sweet spot. The unique thing about 504 loans is there's 3 participating funders, right? So it's kind of a 50%, 40%, and 10% split. 50% of that is going to be a bank. It could be like a partner. 40% is going to be what's called like a CDC, or that's the actual 504 lender. And then the 10% is going to be you, the owner, whatever you're contributing to the program. And so that's what makes that kind of unique. So again, we got 3 different options. All 3 of these types of loans are viable for a laundromat. I think it's really just going to come down to the size of the loan, what you need the loan funds for. That's probably going to dictate where you want to go. I would usually recommend, if you need less than $50,000, microlenders are a great option. They're going to be the simplest, they're going to be the fastest, probably the highest approval odds. If you need more than that, which is very likely, 7A, that's going to be the easiest to find 7A lenders because there are the most 7A lenders. But if you do have a participating CDC or 504 lender in your community, it's certainly worth a conversation. Again, I mentioned they can have longer term fixed rate financing, so it might be the best deal for the business repaying that. So all 3 of these I think are in play for a laundromat. It's certainly worth talking to each and exploring each type of lender out. Now these links, and another great reason you should grab this SBA loan checklist, all of these things you see here linked to resources. You can see these YouTube icons linked to videos. Here's another one. We offer a free SBA loan review where you can fill out a form and kind of tell us a little bit about your situation, what you're hoping to do. And we'll provide some feedback and some guidance on what you should do next, what lender you should talk to, what documents you need to prepare. So I would encourage you to take advantage of that. And we've got some downloadable tools. So yeah, this checklist is great because it's more than a checklist. It's got links to a bunch of different things that will be helpful to you. So as I mentioned, we're going to skip how to find an SBA lender for right now because we're going to kind of wrap it all up and bring it home with that one at the end. What I want to kind of touch on quickly is a little bit about eligibility and requirements. Now, I've got the link to the SBA website right here pulled up, and I should have mentioned back on this checklist, these links all go to the SBA's definition of that program, right? So it talks about who's eligible, am I eligible, how do I use the loan, finding a microlender, which we'll talk about that in a little bit, typical interest rates. So that's what those links are going to. And again, we're going to skip finding an SBA lender for now, but what I want to talk quickly about is eligibility. Now, I'm not going to tell you every single thing that would disqualify someone from applying, but some of the high points that, are going to be the most common disqualifiers are going to be, well, one is going to be your credit score, obviously. SBA loans do allow a little bit more flexibility, which means a little bit lower credit scores. But if you have a really, really rough credit score, it's still going to, I'm saying it's going to be difficult to probably get approved for financing without a strong cosigner. Not a disqualifier, but just warning you on that front. History or criminal record. There are some types of felonies that would bar you from being able to apply for an SBA loan. If that could be of concern to you, I would just look that up. Things like financial fraud and some things like that are going to be issues. If you are in the middle of some sort of judgment process, you need to get that all wrapped up and resolved before you can go through with the SBA loan process. So if that's going to be on your radar, certainly look into that more. We're not going to go into great detail of that here. There are some ineligible use of funds. There are some ineligible types of businesses. We'll talk about that a little bit later on. Most generally, those aren't an issue. A laundromat's not going to be an issue for that. So those are just some things to keep in mind that you're probably going to want to look into as you're going through your SBA process. All right, let's leapfrog down to what does a typical SBA loan process look like? And I should mention as a caveat, this is going to look different depending upon the type of lender, the state you're in, how much money you want. There's so many variables that are going to change the process a little bit. So when I put this together, I kind of chose what are like the staple steps and maybe some things you could expect in that process. But just know it's going to be subject to change for a little bit, but hopefully the lender you're talking to or lenders you're talking to, you're getting to work with a loan officer and they can kind of guide you through that and answer all the questions you have. So if anything, hopefully this is going to help put some questions in your mind of what you should be asking your loan officer along the way. So most generally, any SBA process is going to start with some sort of intake application. Now, the microlender I worked at, which served the state of Indiana, we had an online intake application. Anyone can come to the website, fill it out, and get into that process. During that process, it would ask lots of questions about, them personally, the business. It gave them the option to upload documents. There were some things they would have to check off, like if they knew they would be eligible for this type of thing. So there's some different things they had to answer like that. But most generally, every lender is going to have their own intake application. Some might require a conversation before that, again, depending upon what type of lender it is. Most generally, in 2024, most of them are going to have some way through the website to get that process rolling. Typically, the next step that's going to happen once you've shared some information, inquired about a loan, you're probably going to have a conversation with a loan officer. If you do not have a conversation, like if their process does not include a conversation with the loan officer, I would have a little bit of concern, right? Obviously, getting a loan is a big deal. When you're a startup, it's also a big deal because you just want to know and you want to be able to answer the questions to your best of your ability, and you want to be kind of reviewed on the merit of who you are and your ideas and some different things around that. So they're just taking everything based on what's on paper and never talking to you. I would be a little concerned about that. So hopefully your next step is you're going to have a conversation with the loan officer. So they're going to ask about the details about your specific laundromat, where it's going to be, are you starting a new one? Are you expanding one? Are you acquiring one? What's your personal financial situation like? Just get into those details. Then they're probably going to say, here's all the things we're going to need to get into underwriting. So they're going to ask for all your documentation, which we will talk about documentation after the process. So you're going to get all your documents submitted. And then once they have all that information, they're going to do underwriting. I doubt your loan officer is doing the underwriting. They might be taking a first pass at it, but they're probably going to submit it to an underwriting team. And their job is going to be to go through all of your documentation in your application with like a fine tooth comb, look at it under a microscope, crunch some numbers, that whole thing. I would expect for the underwriting process to have some sort of back and forth, as in they're going to have some questions. They're going to need to clarify some things. So that will probably go back and forth a little bit. Now, again, this step is probably going to differ depending upon how large the loan is and the type of loan you're looking after. But there's going to be some sort of committee review and decision internally. Now, if it's a microlender, like the microlender I worked for, after it made it out of underwriting, right? If underwriting is like, yeah, this is at least good enough to move forward to a committee would review that. And that committee was made up of, some bankers, some community business people, some savvy people. And if they decided to approve the loan, then it could move to closing after that. Granted, this was a microloan, less than $50,000. They might have some conditions. They might say, we'll approve this based off of a contingency. Like if they do this thing, if they add this cosigner, if they, whatever. They might have some contingencies. So they could improve it on a contingency, or, they could decline it, or they could ask some more questions. So this step here, there might just be some back and forth. There might be some circles a little bit until everyone gets on the same page. They get all the answers they need in order to make their decision. Now, this step, especially after a committee makes a decision on that, is where it's going to change based upon the loan amount. Again, if it's a microloan, probably can move directly to closing. So you can get the funds really quickly after that point if they approve it. If it's going to be a 7A loan, and I'll be honest, on this part of the process, I'm not as familiar with a 504 loan because I've only made microloans and 7A loans. I'm more familiar with like what 504 loans are rather than exactly how that process works. But for a 7A loan, which I assume is similar to a 504 loan in that, after you get an internal approval from the lender, there's going to be a new set of documentation you basically have to fill out that are SBA, so they're government forms. Now, depending on the lender, they might have what's called delegated authority, or they might be like a preferred lender, which means the SBA is giving that lender the authority to just make the decision, like fill out the right paperwork, and then you can choose to move forward with the loan. Like they're giving that certification. Some lenders don't have that authority, or maybe they don't choose to exercise that authority, which means they would have to package all that new documentation, send it off to the SBA to get a final review, and then the SBA would say like, yeah, this looks good, you're good to move forward, and then you can move forward. So Basically, I'm just saying there's going to be some additional documentation. There's going to be some additional approvals, and it just might slow the process down a little bit. So here I say may require an additional SBA review or decision depending on the lender and the type of the SBA loan. And then ultimately there'll be a closing. Now, something worth talking about, and we get questions about all the time, is just like, how long does the process take? And that's a really good question. And it's going to be a similar answer. It's going to depend on the lender. It's going to depend on how much money, and it's going to depend on how prepared you are. And we'll talk a little bit more about preparation in a little bit. But to give you a rough idea, just based on my experience when I was a loan officer, for a prepared person, microloans could get done in like a couple of weeks, 2 to 4 weeks. A lot of that has to do with the timing in the month. So like those loan committees and things might not happen, every week. They might happen every other week. They might happen once a month. So depending upon the timing in that month, it might delay the process a little bit. So 2 to 4 weeks for a microloan felt, about typical from my experience. Now, if you were still working on documents and it was taking a little bit of time to go back and forth, it might be longer than that. If you indicate you're really, really urgent and need to move forward and you have all your ducks in a row, maybe they can go faster than that. 7A loans are going to take a little bit longer. I would say probably more like 4 to 8 weeks might be typical, just because again, there's more layers for decisions there. But if you're prepared and you have all your documents and you answer questions quickly, that might be able to move a little bit faster. So, and especially if your lender has that delegated authority, that can make it move a little bit faster too. 504 lenders, I'm not 100% sure on how that works. I would imagine it's pretty similar to a 7A loan, but there's some more moving parts. Since there's 2 lenders involved, it might delay that a little bit. So just saying, prepare to have some patience. This is going to take probably a month, 2 months, maybe even longer, depending upon the complexity and some different unknown variables. So that's a little bit about the process, and then closing on that. Okay. Now let's get into documentation. Okay. So there's going to be some repeats between some of these. So documents for startups are going to be a little different than documents for an existing business. And then acquisitions, it's kind of like both of them mixed together. So let's just kind of start going through these. So again, we already talked about how you'll need to do a lender application. And I should mention the things that I included on this list. Some things you'll be able to prepare in advance, some things you might not be able to, but I'll try to point out those items for you. Lender application, every lender is probably going to have their own application they want you to fill out. So you're not going to be able to like fill one out in advance and then use that at a bunch of different places. You're just going to have to fill out their application. If you talk to more than one lender, which is likely, you should prepare for having to talk to, or maybe you just want to talk to more than one lender. Personal financial statement. This is a link to the SBA's personal financial statement. This is another one of those documents where lenders might want you to fill out their own, and that's okay. I would still encourage you to download this and fill it out beforehand, because it's just going to be good practice. A lot of people have never filled out a full personal financial statement. Maybe, when they were getting a mortgage for a house or something like that, you would. And so sometimes people just don't remember all of the financial details in their personal life, whether that's small loans here and there or pockets of money and on different things like that. So I would encourage you to just, if you sit down and take the time to fill it out early, then it makes it really easy to fill out an additional one, because you can just kind of copy and paste and fill those things out. But yeah, I would suspect most lenders want you to fill out their own personal financial statement. Now, personal tax returns, this is kind of the big one. This is obviously something you can prepare in advance. They're going to want 2 to 3 years of personal tax returns. So if you use a tax accountant, if you use TurboTax, whatever it is, get those accessible in PDF format or something like that, so you have those ready to go. If you have someone in your family that already owns, a small business and it's an LLC or like a sole prop or something like that, there might be Schedule Cs that come with that. I would probably provide that as well, just because they have a significant impact on your tax returns. Next big one for startups is going to be your business plan and your financial projections. We'll do those together because those kind of go together. Now, this probably sounds obvious, but the business plan and the projections are really important, because that's all the lender has to really make a decision. They're making a decision based upon you personally, your financial situation, your credit worthiness just as a person, And then your idea, your concept for the laundromat, like that's the details they have to go off of. So we want to make sure the business plan and the projections are really good. And we actually have a whole video where I go through, and let me just show you right here. We've got a free laundromat business plan template. So if you don't have a business plan made yet, you can grab a copy of this. What I really like about our free business plan templates is we include these 5 key points and examples of basically like how to make your laundromat business plan really good, right? So it's like how to take it from like an average one to like a really good one that will increase your chances of getting approval. And we've got a whole video that I go through this entire business plan, and I explain those 5 key points and I give some tips. And so, especially if you're a startup, I would go watch that video. I would grab the free laundromat business plan template. I think the video should be linked in the description or somewhere on the screen. So I would watch that. That template also goes into details on financial projections and how to incorporate those into your business plan. We have a whole video guide on how to create the financial projections for a laundromat, specifically how to start a laundromat. So it'll go into details on how to create startup projections. So I would definitely encourage you to check that out. Actually, I can even just show you here. I've got the laundromat financial projection template. So all those projections I just showed you in this free business plan template right here. So we've got income statement, cash flow, balance sheets, got some nice KPI data, startup funds, all of that was created using this laundromat specific projection template. This is linked down in the description below as well. This is not a free tool, but there should be a link down in the description to get a discount code if you are interested in doing your projections on your own. This is going to be the best way to do it. You have to have financial projections. You really want them to be good. So either you're going to pay an accountant to do them, or you can hire us. We would be happy to do your projections for you. The next best thing is to buy a template like this that was built. We have a CPA on staff. She's built all of our financial projection templates. This was built by her, and it's really easy. You're only editing things in the blue boxes, and it's pre-filled out with some industry data to make it really easy to know what you're doing. Again, only the blue boxes are being edited on these blue tabs. It's very simple, not a ton of information. And then it's going to generate all of these financial statements. I know my face is covering them a little bit right now, but all the financial statements that your lender is going to need, it just generates them automatically. Comes with free support, a free review, and a money-back guarantee if for some reason the template's not going to work for you. So I encourage you to check that out. And as I mentioned, our team will do the projections for you too, if you would like us to. But that comes with the video guide. You can go check out that video and watch how the projections are made as well. So enough of that. Let's hop back here. You're going to have to, especially if you're a startup, you're going to have a business plan. You're going to have financial projections. We've got some links for some helpful resources there, as well as down in the description below. Now you're going to have a credit release form. Don't worry about doing that in advance. Lenders have their own credit release forms. And let's take a second to quickly talk about the credit release. Each lender is going to do this differently on when they pull your credit. That's something I would ask your lender or your loan officer when you talk to them. The lender I worked for, we wouldn't do it initially. We would ask for a user reported credit score. We would collect some information. And then if we determined this loan was good enough to go to underwriting, then we would do a hard credit pull. So we would wait until we felt like the deal had promise. If we knew after one conversation it was going to be really difficult for us to approve something, we wouldn't pull a credit score because it would change the outcome. Some lenders just automatically trigger credit checks. So I would ask your lender, and that, if you plan to talk to multiple lenders, one hard credit pull is not going to really kill you. If you get 6 hard credit pulls, that's going to hurt your credit score probably a decent amount. So that's probably something worth asking your loan officers wherever you're talking. Government issued ID, a resume, go ahead and put one of those together. It's going to be worth doing. They need to see that you're going to have, relevant skills and experience to start the business you are. So in your laundromat, starting a laundromat, this isn't downplaying the importance or, complexity of a laundromat. It has its own complexities, but a laundromat itself isn't rocket science, right? So if you have transferable experience when it comes to management or business ownership or some different things like that, that's still going to be really valuable. And so you want your resume to reflect that. And then some additional SBA forms that the lender's probably going to have. So documents are going to have SBA, or for startups, are going to have the least amount of documents, but you really want to make sure the things that you are providing and that are in your control are really good. Now, documents for existing businesses, again, lender application, personal financial statement, you're gonna have your personal tax returns again, then you're also gonna have your business tax returns. So, you're depending upon what type of legal entity your laundromat is, it might change where your business tax returns are at. If it's an LLC, that might be in your personal tax returns. If it's an S corp or something like that, it might be in a separate tax return, but 2 to 3 years of that. And then they're going to want a current year, year to date, income statement or profit and loss statement, a year to date balance sheet, at least year to date. They might even ask for more historical, like 1, 2, 3 years, but at least year to date. Now, financial projections, you're only going to really need financial projections if this is like an expansion. So let's say maybe you're opening up a second location, or maybe let's say you're adding on, maybe that you only built out half the laundromat and you're going to fill the other half, or maybe you're adding on to the building to add more machines. Something like that is probably going to require projections, because they're going to want to make sure that the loan that you're going to have to take on to pay for that the business, like how are you projecting to actually cover that loan? How are you going to cash flow that loan? And so that's when the projections are going to come in. If you're looking to just like refinance something, or replace some of the machines or that kind of stuff, you probably won't need projections in that case. A business debt schedule, which that will come through in your balance sheet too, but yeah, a standalone business debt schedule. Credit release form, again, lender will have their own. I don't know why financial projections is in there twice, but we already talked about that one. Your articles of organization, any necessary licenses and permits, those, you would know what those are going to be for your laundromat, and then additional SBA forms after lender approval. Now, acquisition, as I mentioned, that's kind of a combination of both startup and existing business, because if you're acquiring a laundromat, it probably has some historical actuals, right? There's going to be financial statements, there's going to be details around that, but you're also going to have to say to the lender, like, well, this is what we're going to do and what we think the laundromat's going to do after that. So that's kind of stepping into that startup. You're going to be trying to grow it and change it, presumably. So you're going to kind of have to have both of those. So application, personal financial statement, tax returns. Again, then there's the business plan. This link here goes to our business plans. We have an acquisition specific business plan template. As I mentioned, and we also have this video right here is a video on how to create financial projections specifically for an acquisition. But you can see in these yellow ones, we also write business plans. We create financial projections. So we work on a lot of acquisition deals for people just because there's some more complexity involved. So you can check out those programs there, those services there, check out the pricing for it. If you have questions, again, reach out to us directly, either through those pages or, at support@projectionhub.com, you can contact us directly. So you'll need a business plan, you'll need projections, then we're going to need tax returns, from the seller, and then some financial statements from the seller, and credit release form. So nothing new you're seeing here. The only thing that's on this list that's a little bit different is if you're going to need to do due diligence. So depending upon what stage you're in for identifying the laundromat that you want to buy, maybe you've done what's called due diligence, or maybe you haven't. Sometimes due diligence can be expensive, especially if you need to do like a full quality of earnings report or something like that. So here's a little video on how to do some due diligence, a little bit more cost-effective approach. So you can check out that as well. Now, this additional documents, let's just do the documents portion instead of the expectations. Well, I guess we can just do all of this right here. I'm not going to go through all of these, but the reason these are set aside is because these are going to be case by case, right? So, if you are going to be leasing the space you're putting the machines in, then you're going to need to probably provide that lease agreement. Proof of insurance, sometimes that doesn't happen before it closes. It might be within 60 days after the loan closes that you have to provide insurance. If you are pledging a vehicle title as collateral in the loan, then you would need to provide that, right? So we don't need to go through all of those, but the ones that stick out for your situation, these could be just a good reminder on what ones you might need to include. We talked a little bit about any relevant judgments, whether that's criminal or civil, any lawsuits that are involved. A big one that I should have mentioned earlier in the eligibility is if you've had a prior bankruptcy. Prior bankruptcies do not disqualify you unless you've defaulted on an SBA loan or a federal loan before. If you've defaulted on another federal loan, you're not going to be able to get an SBA loan. But be prepared to provide documentation if any of those resonate with your situation. And let's just hit these SBA application expectations really quick. So one thing to know is if you own 20% or more of the business, so if you have partners or maybe for the sole owner, you will be required to personally guarantee the loan. When I was a lender, a lot of times the applicants would say like, hey, I want to keep, my personal situation and the business separate. I don't want to be, I want the loan to be in the business's name, not my personal name. And that would be great advice if that was possible, but that's not possible. At least as far as I know, we never did that as an SBA lender, especially for SBA loans. Any owners 20% or greater will be personally guaranteeing the loan, which means if the business fails to pay back that loan, you will be on the hook personally. And you do not want to default on an SBA loan. As I mentioned, if you default on a loan tied to the federal government, that's going to make getting any other sort of federally financed or supported program like that difficult. Including we won't go into that, but just be mindful of that. You will be guaranteeing the loan. Just because it's an SBA loan, you still have to have collateral. The SBA is going to require the lender, if they're going to back up or guarantee the loan, they're going to want to make sure that the lender has gotten all of the collateral they can, or as close to as much as they can. So if there is a shortfall of collateral, it doesn't mean it's a guaranteed decline. But if the business doesn't have enough assets to secure the loan, then the lender is going to ask for personal assets if you have any available. Laundromats, especially if you're buying the building and all the machines, that's quite a bit of collateral, right? So that's going to be a pretty good chunk. They're probably not going to need some personal, but let's say you're leasing the space and you're only going to own the machines. You might have a shortfall there. And, they might ask if you have equity in your personal residence or a free and clear car. I'm not telling you have to do that. I'm just telling you they have to ask. The SBA is requiring them to ask that if there's a collateral shortfall, because they need to be made whole, as close to whole as possible if the loan were to default. You will be required to invest at least 10% of the loan request for the project costs. So, if it's going to take $100,000 to get your laundromat open, they're not going to lend you more than 90, right? 80 or 90. So you're going to have to come up with some 10 to 20% of those costs for the project. We talked here about debt. This DSCR stands for debt service coverage ratio. That's a ratio a lot of lenders use when reviewing a loan request, that they need to see that be 1.25 or higher. Different lenders have different numbers, and essentially it just is a calculation to say, hey, if you add a loan payment onto the costs surrounding this business, will the business be able to pay for that? And so if it's a barely profitable laundromat that's trying to get an additional loan, if that isn't above that 1.25, that 1.25 is kind of like, $1.25 of free cash flow. And then they may not be able to make the loan because they don't want the loan to be the reason that basically the business can't afford it, So that's a calculation they're going to look into. And then, as I mentioned earlier, these are businesses that are ineligible for an SBA loan, but we're talking about a laundromat. Laundromats are eligible for SBA loans, so that is not a concern. Okay, so that's a long section. We just talked about all those documents. If you have questions about any of the documents about your specific situation, whether that's making the business plan or making the projections or how to collect a document or any of that kind of stuff, don't hesitate to reach out to us. We truly would be happy to help answer any questions. You can fill out this free SBA loan review too if there's other things you want to talk about. So hit us up. We would love to help you on that. Okay, now we've kind of come up to, let's talk about finding an SBA lender. This is a big one. So here you can see we've got microlenders, 7A lenders, and 504 lenders. Talked about the differences of those earlier, and a big thing that makes them different is they're just different places. They're different types of lenders. And so there are different lists you can look at and different things you can apply to. So let's talk about microlenders first, because these are probably the ones people know the least about. I like these two lists. You can see one's CDFI list, which stands for Community Development Financial Institution, and then your SBA microlender list. All you really need to know between the two of those is a microlender can be both. They can be one or the other. SBA, this is the actual certified SBA microlenders. CDFIs don't necessarily, they may not be SBA microlenders, but CDFIs they can have their own small loan programs that aren't SBA, so they're still worth including because they're good community programs. So let's go ahead and open up this link. This is on a site called Opportunity Finance Network, or OFN, which is basically just a network of all of these small lenders and these community support organizations. And let's say I'm going to be looking for a loan fund, and I want to look in Indiana, and I would either do micro enterprise or business. I like to set it to high just so I can see more options. And actually, I want to go back to micro enterprise in this case. So first thing I'll point out, I searched for Indiana, and the top result is California. What's up with that? Or Illinois. Some CDFIs are multi-state, right? They're big. They're the bigger CDFIs. And that's just, they are still good lenders. They're still worth considering. They're just different, right? So I recommend, especially if you're looking for a microlender or CDFI, to look for ones that just represent at least your state, because they're just going to be more catered to you and understand you better. So for instance, this is the lender that I worked at called Bankable. We served just the state of Indiana. And some of our programs were even smaller subsets of Indiana. And so you can read a little bit about them. You can go to their website. One thing I will mention about microlenders and CDFIs is they take a little bit more research. And what I mean by that is that these lenders are called mission lenders. And that means that they might have specific initiatives that they like to lend to. And that isn't meant to exclude you. It just means they might have some different expertise. Bankable was a general lender, right? It was really just any small business, or whether that was existing or startup. But some might have like a trucking program where they like to make loans to truckers. Bankable had a Black-owned business loan product that they would lend to. So the purpose of mission lenders is not to be exclusive, to like exclude anyone or to do that, but they might just have certain programs set aside for specific types of businesses, and which can really increase your approval chances if you fit one of those programs. And so it's a little bit more work, but I just would encourage you, do some Googling, read about those different things to find which lenders are active in your area. Because if you can find one that's overlaps with where you're at, it can just be a really good experience. It can be a very friendly, a very local feeling experience, and still get access to that capital. And so that's one tool that you can do that. The other is the SBA's actual microlender list. So if I go back to Indiana and I filter that, again, we can see just a few, and here's Bankable again. So that was the lender that I worked for. They were both a CDFI and an SBA microlender. So that's why they're on both lists. And so that's a good starting point for finding which ones. One key point that I haven't mentioned yet is, in order to participate or apply or get a loan from any of these SBA lenders, you basically have to be able to demonstrate that you can't get a traditional loan from a bank. So the first point of action I would take is talk to your home bank, probably just whoever you have the best relationship with. Float the idea by them, be like, do I have any chance at getting a loan for my startup laundromat? And if they're like, well, that's not really our sweet spot, that's okay. You can kind of take that as your decline. Now you can pursue SBA, okay? So if you get an SBA loan, you're going to have to certify, like, I wasn't able to get this as a conventional loan, which you typically wouldn't be able to in a lot of those cases, but that's probably still worth saying. Let's go back to our checklist. Now is 7A, which again is the most common. And we've got two options here, and let me explain these. One says, if you want to find the lenders, and the second is if you want the lenders to find you. Now, it sounds great to say, well, I want to sit back and let all the lenders find me. And just a word of caution, I'll show you both examples here. So I don't want to lose my checklist here. This is an SBA tool. Where did that go? SBA has a tool called Laundromat. It allows you to provide all your information, and then it will blast that out to a bunch of different lenders, and then those lenders can opt in and reach out to you to talk to you, which sounds great, right? The lender I worked for participated in that program. We saw leads from it all the time. The word of caution is it can actually end up being a lot more work because you've got multiple lenders reaching out to you. And to be honest with you, lenders just really like leads. They really like applications. So I'm not saying it's not that people don't want to make loans to you. It's just that a lot of people are going to try to reach out to you because they want your application, but they may not actually have a high likelihood of approving you for that application. So it might actually end up creating more work for you without success at the end of it. So that's just my warning, is don't choose this route just because it's less work for you, because it can actually be just as much or more work for you. The other version is a tool that we've put together. And what this tool is we took all of the publicly available SBA loan data from the last few years and we organized it into a tool, and you can get access to it in that link. But I have it open here, so I'm going to show it to you. And what I really like doing about this is you can filter it, right? So I'm going to say, I want to look in Indiana, and I want to look for laundromats. And what this is doing is it's showing who has made loans to the matching criteria. So the point of this might be your home bank, or maybe the lender that your broker wants you to talk to. They just may not be the best lender for you. Sometimes it is better to work with a lender who has experience making loans to the type of business you want to start, like a laundromat, right? So now I can see in Indiana for laundromats, these are the lenders who have actually made some loans to laundromats. Now there's not a ton, because you start getting that slice more specific and more specific. And then you could even go one step further and say, I want to do a startup, and this might go down quite a bit. See, now we can see the only credit union that's made a startup laundromat loan in Indiana. And that's just because laundromats might be hard for lenders that aren't microlenders. So if you don't have options here, then microlender might be the great route. But this is a tool I like to recommend. Indiana's not the most populated state. So if we did this for like California, there'd probably be a lot more options. But this is a really great way and something we like to offer is we can do this for you and even try to make introductions to the top lenders for you. So if that's of interest to you, you're welcome to reach out and ask us for some help on that. So those are some tools. And then lastly, just like the microlender list, this is the list of CDCs for 504. So you can filter by your state and know who to basically look out for if you're interested in the 504 program. So we've got some options here, and you can contact those, go to the website, see what they're specialized in. So that's how to find an SBA lender. Again, we've got a video here that demonstrates how to do that. We're happy to help do that for you if you want to do the free SBA loan review process. So you can check that out and reach out to you. And the last thing that I want to talk about before I let you go, and that is I just have a quick off-screen list here of some recommendations to improve your approval chances, and some things that I've just took from my experience that I feel like I can share with you and that would be helpful for you. First one is be prepared. Sounds cliche, but just be prepared. Those documentations we talked about, have as much of that prepared and ready to go as possible. That's just one of the best things you can do. Be responsive and just have those documents ready to go. It's okay if you talk to your loan officer and you don't have a business plan ready yet, but they can't do anything for you yet because you still need to prepare material. So I would start that sooner rather than later. Second, have the right expectations. That applies to a lot of different things. I talked about, expect to be personally guaranteeing the loan, expect to maybe have to find a co-signer, expect to maybe have to pledge some personal assets, expect that if you don't have your documents ready and you're not responding quickly, that it's going to take a longer time. So just have, realistic expectations in the process. 3, find the right lender for you, not necessarily where your loan broker wants to send you or your hometown bank. We just talked about that one. Don't expect just because you've been banking with your bank for 20 years that they're going to give you a loan for your startup laundromat. They may not. That might be outside of their expertise, and you don't want to necessarily work with a lender that doesn't have an expertise in what you're doing. And if you're working with a loan broker, they can be very great resources. Just keep in mind, they are doing it because they're going to get paid by the lender for providing that, most likely. And so they are incentivized to get the highest, rate from someone. So maybe that lender isn't going to give you the best terms, best structure, be mindful of that. Next, share the dirty details because they will come out eventually. So save yourself the time. If you have any sort of criminal record, if you have specific reasons for a poor credit score, if you have any confusing financial line items, if you're an existing laundromat, or make your projections, or you're hiding something in there. So just be honest, because you want those things to come out in the process, because if they come out after the fact, that's grounds for calling your loan, which would be not good, and you don't want to do that. Have accurate financials and realistic projections. So do your research, compare to industry benchmarks. We've got videos on how to do that. I'm not going to talk about that right now, but handing over your projections and your financials, you want to make sure that's a really good first impression, because if your numbers are confusing or untrustworthy, it's hard to say, well, hold on one second, go away and come back and all your numbers are different. So don't hide anything in confusing line items. Look out there at what industry averages are, whether that's profit margin or revenue numbers or cost to open your laundromat, and just make sure those are within range with what's typical for the industry. We talk about that in our how to write a business plan for a laundromat video. I talk about that a lot and demonstrate how to do that. Strengthen your application as much as possible. Ways to do that are add a cosigner or personal collateral if needed. Nobody wants to have a cosigner, but I encourage you to think about in advance who a good cosigner would be. Have a conversation with them, see if they would be interested in it. If you get their buy-in, great. Now you have that in your back pocket. So when it comes to the point when your lender says, we would feel more comfortable moving forward if we had a cosigner, you can say, great, I've already asked so-and-so, let me confirm with them. But assuming they're in, then we can move forward. That really speeds up the process, saves you from having desperate last-minute awkward conversations. I encourage you to do that sooner rather than later. Best cosigners have good credit scores and good outside income that does not depend on the business that you're running or starting. And lastly, make sure that you as an owner or your leadership team have ample and relevant experience. So you got to demonstrate that you know what you're doing, you know what you're getting yourself into. If you personally do not have all of the relevant expertise and skill set it takes to start your laundromat, that's okay. Just make sure you supplement your experience and skill set with partners or key employees or a manager. Have those lined up, have their skills lined up. You want to make sure you're a well-rounded team, and make sure that's well documented in your business plan and your loan application experience, so that your lender has no doubts that you know what you're getting yourself into and that you can do it. And there you have it. That is the end of the SBA loan checklist. Grab your copy of this, go through all the resources, do the SBA loan review, reach out to us. We have so many resources that can be helpful to you, free and not free, but we will do everything we can to help you, whatever budget you're working on. And give this video a thumbs up if you appreciated it. Leave a question down in the comments and below if you have one, or contact us at support@projectionup.com. If you have questions about anything this list has or I mentioned today, we would love to work with you and help you out. So without going on and on even further, I wish you the best of luck, and we'll see you in the next video. Thanks.